Hello, 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 everybody. Welcome to the Decentralized Masters podcast, your go to source for everything in decentralized finance. My name is Tristan, and I'm here today with my co host, John. We're here to guide you through the ever changing world of DeFi, one strategy at a time. Every week, right here on the Decentralized Masters YouTube channel, we go live at 2 p.m. Eastern Time to bring you the latest insights, updates, and tools to help you in the DeFi space. How are you, John?
I'm doing pretty good, man. I mean, Bitcoin hit $114,000. Markets are looking pumpy. Stock market's also doing pretty well today. I can't complain, man. I feel like we're probably going to end the week at a really good positive note.
Yeah, like even just looking at that chart right now that you have up, we got a clear breakout above there. So, of
Yeah,
the
exactly.
previous
Things are looking
resistance.
very positive.
Yeah, markets are good. I'm feeling a little under the weather right now for the viewers, so if I sound a little bit groggy, that would be it. But we are going to push through, just like Bitcoin is right now at 114,000. Incredible.
Nice. Yeah, 113 now. We've come down a little bit, but we're going to go ahead and look into what's going on with the market. Things are happening just like as we expected. We've been talking about this kind of breakout happening in the last couple weeks, specifically on our Let's Talk Crypto yesterday. But welcome in to all of you that are brand new to the channel. Make sure to like, comment, and subscribe. Turn on post notifications. Most importantly, we do go live twice a week. But the best ones you definitely do not want to miss out are Thursdays because we have Tristan here with us. Usually the way we like to go ahead and start off is by taking a look at crypto bubbles. So let's go ahead and start off taking a look at crypto bubbles.
Whoa.
On the monthly, we do see a few tokens doing quite pretty well. Pengu is really the one that's standing out, but out of all the altcoins, I would say has been picking up quite a bit, up 37% in just a month alone. Taking a look at the weekly, I don't know what this M token is. You know what this is, Tristan?
I
Possibly
have no idea.
meme core.
Ah, of
Meme core.
course.
It's top 97. What the heck is this? Oh no, is this number 204 though? Meme core. Interesting.
Meme core.
This thing's up almost a 6x return. And as we see on the weekly, we do see lots and lots of green, at least on average between a 20 to a 30% move on most of these assets. And then taking a look at the daily, we're going to ignore this token right here. But as we see a little bit neutral, I would say on average between 10 to 15%. And on the hourly, of course, a little bit of green. So let's go over to fear and greed chart and see what's going on. We have now entered that area of greed that we were in yesterday, the last week, and the last month. But now we are entering that 71 zone, which is getting closer to extreme greed. I think after extreme greed is what, 74, 75, if I'm not mistaken? Yeah. Something like that. So we definitely see some excitement in the market. So pretty good things to go ahead and take a look at. Now, we're going to go ahead and take a look at the market. So let's go ahead and take a look at the NASDAQ, see how the NASDAQ's performing. We do see a little bit of a correction going on in the NASDAQ right now, but we do see the Dow Jones flying. It's trying to attempt this breakout on this resistance. And we could go ahead and see this breakout relatively very soon. I'll probably give it less than 2 weeks for the stock market to do this. Realistically, it could happen tomorrow. But tomorrow is Friday. Usually Fridays, if the market is not positive, there will be a sell-off. And then that usually means that we're followed with a few days for next week until we start to see that recovery. So realistically speaking, we could actually see this breakout happen by the end of the week with the stock market, and this will bring in more excitement into the market overall. What are your thoughts about this, Tristan? Do you think we'll see a breakout on the Dow Jones, or do you think it's still a few more weeks before we start to see it make new all-time highs?
Yeah, so with the Dow Jones, it's a bit of an unfortunate situation for it. For example, you see NASDAQ already at all-time highs. You see the S&P 500 already at all-time highs. And it's just because the different types of stocks that these indices represent. So NASDAQ is tech heavy. So you got the big ones. You got NVIDIA. You got Amazon. You got Facebook, Meta. So those stocks are already high flyers, doing really well. S&P 500 is more broad, so it does have some of those tech stocks on the index there as well. While Dow Jones is less tech heavy, more like the industrials, you got a lot of oil and gas. So it doesn't fly as high, and but however, it's not as volatile as Nasdaq, for example. So there are some other players in the Dow Jones that might take a little bit longer to start making gains before the Dow Jones index catches up with the Nasdaq and S&P.
Yeah, we're almost there. We're not that far out though. We're slightly, I think, less than a 5% move, if I'm not mistaken.
Yeah,
Actually, less than a 1%. Almost a 1% move from making new all-time highs. So I think we should probably be seeing this breakout relatively very soon. If not by the end of the week, I would say by next week you should definitely see some sort of breakout. Of course, we are at a level of resistance, which usually signals a lot of selling pressure around that zone. So depending on how the market moves, then we could start to see some more downside and start to see it come back down to lower levels before it retests this prior all-time high. But personally, I think we're more than likely going to reclaim and break above it. And then as for the S&P, as Tristan was talking about, the S&P and the NASDAQ have already been performing very, very well, have already went ahead and made new all-time highs prior to what we saw back in February. Now, what I want to put all of you guys into perspective is what we're seeing in the market, right? So we've talked about this a few times, but I just want to go ahead and give you a quick reminder about this. The NASDAQ or the whole entire stock market and crypto market has never seen a correction this big prior to the pandemic. So the pandemic was like when the big correction happened. This is our second big correction that we have seen in the markets in the last couple of years. If we actually go back all the way back to the pandemic, we see a very similar scenario where we see a V-shaped recovery and a recovered. Now, I think the difference between this time when it recovered was possibly because of a lot of money being in the liquidity, right? Is that correct, Tristan? Do you think this is the reason why this V-shaped recovery happened a lot quicker and faster?
Absolutely, absolutely. Nothing makes the recovery faster in the stock market than $2,000 stimulus checks going out to everybody.
Yeah, so the market got a lot of liquid very, very quickly. I mean, it topped at around February 2020, dumped all the way for about a month, 2 months, all the way to March. And then from March, the ends of March, early April is when the market started to take off. And we actually go back to what we just witnessed these last couple months, see a very similar scenario right here. So we do see that February was the area it topped, and we started to see what are the coincidences. The bottom was also between March and April. I don't think it's a coincidence. So the same literally almost V-shaped recovery that we saw during the pandemic back in 2020, we saw it here in this market correction. The only difference is that we don't have a disease. We now have tariffs, which is the biggest fear. And two, we don't have as much money in the market as we did back during the pandemic when the government was just giving out free money to everyone. So I think more people were willing to take on that chance, take that $500, $1,000 risk because they were also getting EDD payments. And they were willing to take on that risk. And I think that's one of the main reasons why we also saw the market quickly recover back in 2020, a lot faster than we saw this recovery here. But as we see, it's literally the same V-shaped recovery. If anything, I think this was a lot more aggressive than what we saw during the pandemic, which means opportunity in the market. Now, taking a look at Bitcoin before I pivot, but I want to ask Tristan, do you find it interesting the fact that it's semi, I don't want to say correlated, but it's semi followed what we saw back in 2020 with the V-shaped recovery to what we're seeing this market cycle. And this talk is tariffs is the big scary word.
Yeah. I thought the whole tariff threat was overblown. Like it was a lot of just doom and gloom from the media. For the most part, we didn't really expect too much. Like from tariffs, especially in crypto. Like tariffs don't affect crypto.
Yeah.
They don't. They could have affected consumer spending, and that would affect crypto. But it turns out that they didn't. A lot of companies did a lot of their buying beforehand, before Trump was elected. just in case he was. And so they bought a lot of their products already into the United States. Therefore, there's a lot of products in the United States. And now we're actually getting some data from these tariffs. And for the most part, it hasn't caused any inflation. And a lot of the other countries in the world have also come to the bargaining table with the United States, and they've made trade deals. So largely overblown.
Yeah, and I think the biggest thing, like when it came to consumer spending, the problem that we saw is that if you kind of take a step back and realize what was going on, consumer spending has been slowing down for quite a long time now. It's been going on, I think it's been slowing down for the past 2 years. Luxury sales, retail spending, vehicle purchases, those are all signs of a weak economy, which is usually not a good sign for the economy, right? So those numbers have been getting presented. The car market crashed 30% minimum, about 30% in these last 3-4 years almost since the pandemic. Now, what changed all of it was the scares of tariffs. If anything, I think that motivated more consumer spending to happen under the fear of, I have to go ahead and buy this before the price goes up in a month. And that was a mentality that was, I could almost guarantee you, what spiked up a lot of actual sales in a lot of businesses. Because believe it or not, the car market actually did the best they've ever had the first quarter of the year than they ever have since the pandemic. That should say something. The fact that people were going out crazy buying cars because of the scarce fear of tariffs went ahead and spiked buying interest into the car market and other luxury goods and other items, which brought in, wouldn't you call it kind of like artificial consumer spending? Because it's really just a temporary reaction to what they're doing, not really like, let's spend money now because we believe we're in a strong economy. It's more of like, let's spend money now because we're unsure of our economy, but why don't we just go ahead and supply ourselves, like you said, the businesses, things like that, in order to prevent what could potentially happen in the future. So it's more of a consumer spending out of fear, would you say?
Yeah, it was artificial demand.
Artificial
Demand just
demand.
pumped up by fear in the market that if I don't buy this month, next month it could be 20% more or 30% more due to the tariffs. So people went out and tried to buy before any tariffs went into effect, and then the tariffs, for the most part, haven't really gone into effect. Most countries have all made trade deals, so
Yeah,
artificial demand.
I think it was more of that artificial pump just to kind of stimulate the economy temporary as they like kind of prolong cutting rates. Because if they would have never done that kind of like stimulation into the market, I don't know. I think things would be looking a lot worse than what they are looking now. So it's really interesting. I mean, I'm glad too because I was actually car shopping these last couple months, and it was during the time of the tariffs thing, and I was like, ah, damn. I was like, there's no way this is happening now when I'm looking for a new purchase. I started reaching out to dealerships, and the first thing they were always telling me, "Oh, tariffs, tariffs." They already had inventory in the U.S. Like, I don't know what they're trying to talk about. Tariffs are going to raise the prices up, at least not for the new vehicles or the new products that are already in here, right? So they were using that fear tactic a lot. Luckily, I was almost going to snap into it. I was almost going to fall for it. I was like, maybe I should buy, because what if it does go up 20-30% in the next 6 months? And I was like, you know what, I'll just wait. I was like, I know this is usually noise. I'm like, I'm sure all of this is going to come down, and next thing you know, the next month, okay, no changes to the tariff, just wait another month. So this is just a way to like just artificially stimulate the economy. So the biggest lesson we can learn from here, guys, is don't react to your emotions on how the market is moving. Take a step back, take a breather, go for a walk if you have to. Take your head off of crypto for a minute and really think things through, whatever you're doing, whether it's placing a trade, entering a position, considering of selling a position, or any of that. Always double confirm, check. Do not let your emotions get in place. I think that's the hardest thing that we have to deal with going in this market, is feeling something.
Yeah,
and I think that's
car salesmen aren't usually market analysts. So
yeah. they'll say anything in their favor, right?
Oh,
And
absolutely.
in this case is a little different. We have to be a little bit more aware, but we also have to keep in mind that a lot of these things that we might be hearing are not going to be related directly to the market. Now, the rumor that I've been hearing a lot, and I want to go ahead and talk about in today and kind of touch up on it before we start getting a little bit more into the charts, is this idea of a super extended cycle because this time is different. I've been hearing that quite a bit. Have you, Tristan?
I hear this time is different once every day.
How do you personally feel about it?
Um, yes, there is new dynamics to the market. Yes, there is lots of institutional money in the market. Um, it might be different in we don't see that incredible volatility that we used to have in previous crypto markets. So instead of going up 50% in a month, maybe we go up 10% or 15%. And then that same thing applies to the downside. Maybe instead of dropping 50% in a month like we used to, we only drop 10 to 15%. And this is because of the institutional money. But I think the cycle largely stays intact. This time is different is a very dangerous thing to believe.
Yeah, it's definitely a dangerous mindset to have. I almost kind of fell into it, to be completely honest, because I was like kind of taking a step back, and I'm like, well, last bull cycle, we all dreamed of like what we're seeing now, ETFs, president's endorsement. We would have never thought of in a like probably 20 years.
Nope.
Tokenizing of digital assets now too, as well with stocks and real estate and things like that. There's just so much happening so quick that, especially if you've been in the space early on, in the last prior market cycles you've dealt with, this what we're experiencing today has always been a unicorn fairy tale dream. The what if one day people started adopting this? What if that one day, people start actually using this technology? And that day is today. And that's what we have to be very, very careful with the mindset that we carry. At the end of the day, a lot of these tokens, as I always mention, do not fall in love with a lot of these technologies. A lot of these technologies come and go, and not everything is going to be comparable to what we've seen with Bitcoin and Ethereum and other top blue chips in what we've seen these last couple months or even last bull cycles. There's always going to be different narratives, and I think this narrative that is being played on is not only just the AI narrative, but the this time is different narrative.
I like that.
So, all right, like so just be very, very cautious. I think if we were talking just strictly over the charts, I think we're going to have a very positive market. But there is a few things that we want to go ahead and touch on right now. So let's go ahead and take a look into the charts. I had to get rid of that yellow. That thing just messed my eyes. But taking a look right now at Bitcoin, we do see Bitcoin has touched $114,000. It doesn't show it right here on Bitstamp, but I did see on a few other exchanges that Bitcoin did hit $114,000. So we are getting ready to celebrate, but the celebration has not really started, guys. I'm sorry to tell you, and I'm sorry to break it for you. I know the markets are looking very good, but as I mentioned, we do not want to go ahead and act based on emotion, right? We want to go ahead and take a breather before we get excited like the rest of the people. We still need a few things we need to break above, right? We need to see if Bitcoin could go ahead and hold above this range. If Bitcoin doesn't fall any lower than 1010 or 109, that is going to be really, really nice. We want to see a bounce from somewhere. Either it continues to go up or it breaks down one last time and then it continues that uptrend to the upside. But it's clear as day that we do see that Bitcoin has now entered a uptrend. If we were to go ahead and zoom out, it's clear we're in an uptrend, but we still need to go ahead and have this last confirmation for this breakout of $113,000 to see if Bitcoin is going to continue to go up or if it's going to go ahead and get rejected and it's a fake out. So we still have a few things we need to go ahead and worry about. Like I mentioned, I'm sorry to break your bubble. I mean, it's an exciting time in the market, But realistically speaking, we still haven't hit any really major areas for us to be celebrating yet. Things are looking positive. Stock market's looking good. I think everything's aligning to the way things should be looking in order for us to be very, very positive, that we could be seeing a very good month of July into August, but the signs have not been fully here and they're not fully confirmed. So let's just hold on tightly. But one thing with Ethereum, we'll talk a little bit about it, but Ethereum has already touched $2,800. So if Ethereum breaks above 28, ideally it would be around towards $3,000. That is going to look very, very positive for a lot of the altcoins and Ethereum specifically. Now, what are your thoughts right here with Bitcoin, Tristan, on where we're currently at? Do you think we're going to continue to just fly up? Do you think we're going to go ahead and try to look for a support before it balances one other time before we start breaking even higher past 113, 114? What are your thoughts here?
I find Bitcoin very interesting, or this current move that we're on. Funny that it coincides with a lot of interesting things happening in politics. For example, we just had the big, beautiful bill pass, massive spending bill. So that's a lot of liquidity or inflation coming into the market. So you do see also a lot of people worried about the strength of the US dollar. I'm pretty sure John will show us US dollar strength at some point soon here. But you see that the strength of the US dollar has been coming down a lot as well. Exactly, there you go. Pretty much bottoming. So anything that is priced in dollars, which is Bitcoin included, has been starting. Bitcoin, S&P 500, and even the Nasdaq. All of those are priced in dollars. So you see that right now. Strength of dollar going down. Assets priced in US dollars going up.
So how low do you think the dollar is going to go to?
Ooh,
I have it
that's a
in
good
these
question.
two zones, and it's interesting to see. We were talking about these zones almost about a year ago, the dollar possibly reaching these areas, and it's getting near it. I mean, we're at 90, 96, 95. I do think we could go as low as 94 and even go as low as 92, which is really interesting to say, to be completely honest.
Yeah, the dollar has just been so strong for so long. Actually, seeing some weakness in it is news. It's new. It's interesting.
Yeah, what's also very interesting too is that I've noticed that with the dollar, back in like Black Monday, this is where the dollar spiked quite a bit, 164, then crashed, and then we had the dot-com bubble, which so happened to be when the dollar was around 120, 117, which is where we were at back in 2022. I believe that's 2022. Yeah, 2022. We were around the ranges of where the dot-com bubble was at back at around early 2000s. And we see right here that we were around this area for about, since 2022, we touched it a little bit. And luckily, it tried to break above it, and it didn't. So it actually went down. And that's exactly what we needed to see. We needed to see the dollar go down in order for the markets to go up. Now, the question is that I'm asking myself, what kind of crisis are we actually getting into this cycle? I call this a tech crisis. Tech crisis in a sense that we have AI now. We have a lot of people getting replaced by artificial intelligence. You go to your local fast food restaurant. You usually don't talk to humans anymore. You have robots delivering your food for you. You have cars that now drive you or self-driven, like Uber. And we might have Terminator next. Who knows? But
yeah, Grok has been saying some interesting things out there, so I wouldn't even doubt it.
Really, like what?
Oh, Grok is Grok 3, so they're working on Grok 4, and it's almost scary. It's like Grok 3 is acting like a child, like it knows that Grok 4 is coming, and it's like lashing out.
Really?
Saying very
funny.
strange things on Twitter world.
That's pretty funny if you ask me.
Yeah.
Chad, welcome in, Chad. Chad is asking you a question. I seen a story on Japan bond rates. Tristan, did you catch that?
I did read an article today about Japan, actually, and the bonds. It looks like they are doing a bond sale. So just like they do normally in the United States, we sell bonds to fund the treasury. However, the yields on Japanese bonds are going lower and lower, which is interesting. It's good though, because that is actually making the yen a little bit stronger here. Whereas though things could get interesting is though that means inflation. So as the yields in Japanese bonds drop, that means people are a little bit more interested in it. I definitely need to do a little bit more digging, but I think for the most part, it's not affecting the market too much. It might be driving the M2 up because less, because that is more money printing. And then M2 goes up, Bitcoin goes up, gold goes up. So I did catch that a little bit. Thanks, Jeff.
We do see the forex exchange taking a hit too. We see right here on the right hand side. I mean, Euro USDC. We see it entering the area of resistance. Will it be able to break through? I think almost many currencies are a little bit stronger than the dollar right now at the moment. Maybe perhaps not. I'm not. No, it doesn't look like the Japanese yen is, but looks like the British pound and the euro seem to be a lot stronger than the US dollar at the moment. I don't know for what reason exactly. Do you know, Tristan?
Big beautiful bills.
I think a lot of these other countries have already started implementing stimulation into the market. Is that correct? Liquidity.
Yeah, the EU has cut rates several times already this year, whereas the United States hasn't cut at all. So
really,
yeah,
that's interesting.
Even Canada was cutting rates. We cut rates a few times during the winter.
So how's the stock market out there in the Canadian markets?
Our stock market's boring. Always has been boring. Always will be boring. Our stock market has no tech. There's like one big tech company in Canada, and it is good old Shopify. But besides that, we're just a country of oil and banks.
So barely any cool stuff.
No, not really. Stock market this year's been doing okay in Canada. It's been performing better than it usually does, but it's not anything that you want to write home about. Of course, you don't want to sell your assets to Canada.
What is it called? What platform would you prefer more? What assets you like investing in? Canadian markets, the U.S. market, Asia market. What do you prefer? Europe market?
U.S. markets, hands down. Even in this current environment, yes, this is not a great year for the United States. But if you go back for the last 20 to 15 years, it's been all good. If you were overexposed to anything other than the United States for the last 10, 15 years, you've been seriously underperforming. I will take the words from Warren Buffett at the moment, and I'll say, he says, never bet against America. And as a Canadian, I agree on that.
What is the best thing you like to do in that sense? Is it mostly holding on to tech stock companies? What are you doing? Gold, that's a little bit more universal. What do you prefer on there besides crypto? Because we're all here for crypto. Crypto's a global thing, but I'm just curious to know on that end.
Yeah, when it comes to the U.S., absolutely tech stocks. There's no one else, no other country in this world except maybe China, and even then it's a bit of a gap. No other country does tech like the United States. The United States is leagues ahead of everyone in terms of tech. Also, U.S. consumer stocks are usually pretty good. So I'm talking like the things like Walmart, Costco, very stable bellwether stocks. Like if the market goes into recession right now, I would be very comfortable just holding some Costco and some Walmart, because everyone is still going to go and buy food. Everyone still has to go and buy clothing. Maybe they're not going out for the Louis Vuitton close. Maybe Louis Vuitton stock, usually not a great performer in recessions, but Walmart definitely
I
is.
didn't even know they had a stock, to be honest.
Oh yeah, LVMH. It is like the most valuable stock in all of Europe.
Really?
Yeah, it is. At the market cap is 251 billion.
LV what?
LVMH.
Oh, I didn't even know that. Oh, I don't think Robinhood has it.
Well, it is a European stock, so
Yeah, that
that
makes
would
sense.
make
I didn't even
sense.
know they were public. I always thought they were private companies.
Oh yeah, it's like LVMH. It's Hennessy. It's a conglomerate of a whole bunch of different luxury providers. Dior, Sephora.
Oh yeah, I
Uh,
know what you're talking about. They own pretty
yeah,
much
all
every
under one
designer
banner.
store.
Yeah,
Coach, Michael Kors, they own
yeah.
everything, man. They own all the
They
little
literally
small
own all of
ones.
it.
They own all the little affordable ones, and then the mid, and then the higher tier, and then the exclusive. They got their hands on everything, man.
Yeah. So
Uh,
they have earned their $250 billion market cap.
that makes sense. I didn't even know that. So learn something new every day. But taking a look, let's go ahead and pivot now over to Ethereum and see what's going on with ETH. So ETH looking very positive alongside with Bitcoin. Not really much to be said here with Ethereum. I mean, we are at his resistance. So if anything, we could potentially see Ethereum actually breaking out towards this $3,000, probably a lot sooner than we'll see a breakout with Bitcoin, unless the market sentiment shifts where we just see Bitcoin from 113 to just shoot up to like 120 with no problem, which, also is not unusual. But Ethereum right here is now testing back this $2,900 range. And we need to really break past this. This is a very strong area of resistance, an area that Ethereum has always struggled to break through. But once we break through, this is going to be a huge accomplishment for all of us. $2,800 is the key area that many traders and investors are looking at very, very closely. So I'd recommend all of you write it down on a piece of paper. $2,800 is what we need to see Ethereum break above, meaning we need to see Ethereum trading above $2,800, at least for a very good long time. We're talking about for at least over a week plus, or 3 days, 4 days. It just depends on how quick the market moves. But typically, once the market is ready to make a move, it usually consolidates and then just breaks out. So realistically speaking, Ethereum could actually just fly through it up here towards these $3,000 ranges and no problem. But $2,800 is a key area we all want to focus on. And I best believe that once Ethereum breaks above $2,800, approaching that $3,000 and hitting it, that's going to bring in a lot of excitement for the altcoins, and that should go ahead and bring in more confidence to altcoins and altcoin season. Because right now Ethereum has been very, very weak, has been losing a lot of strength this market, and I think that's just due to the fact of a lot of other layer ones and layer twos. But now what we're seeing here with Ethereum is we do have that possibility of having that mini altcoin run that we're all waiting for. And that would mean that we would have to see Ethereum trading above $3,000 to start to see that momentum pick up. Now, what are your thoughts here with Ethereum, Tristan, with what we're seeing? I know it looks just like the chart with Bitcoin, but is there anything else that you would suggest here that we're looking at with Ethereum, or something that we should keep in mind?
Not too much. What you said is pretty much covering all of it. We got to watch out for that 2,800 range. If we go above that, great, but it is quite a strong resistance. We have hit it not once, but twice in the past. So definitely got to watch out for that. I'm also quite focused on Solana as well.
I was actually going to say Solana too. I was going to take a
Solana's
look at
doing good.
Solana. I was going to be like, I never take a look at Solana anymore. I was actually going to tell you, we should start covering Solana now moving forward, and you read my mind. So let's take a look at Solana. Let's see what Solana is looking like right now. Oh, we talked about this possible cup and handle pattern, remember?
Yeah. And it's looking better. Like that is a decent looking chart, but I think it does have a lot to recover still.
Yeah.
When compared to ETH.
Solana definitely took a big hit. The market shift is kind of wild to me, if you ask me. Like with Solana, it just shifted, man. It shifted pretty aggressively. I mean, we went as low as 102.
Yeah,
but yeah,
the whole pumped up fun and the excitement going away from meme coins has also contributed to Solana's decline here as well. So.
Yeah, 100%. By the way, with the whole entire thing with Pump.Fun, have you come across anything new? Because I know they were coming out with their own blockchain. We talked about how this is a possibility that we were going to start to see volume slow down on Solana, which seems like we kind of are, but we can't really assume fully because the rest of the market hasn't really shown very strong positive signs besides Ethereum and a few other altcoins. But how is that layer one coming along for Pump Fun?
If I'm not mistaken, I actually saw today some news on the Twitterverse that Pump.Fun has officially said that they will be doing an ICO. So the Pump token is going to do an initial coin offering July 12th. So literally this Saturday.
Wow.
And it will be an airdrop. The post on Twitter says their plan is to kill Facebook, TikTok, and Twitch, but they are going to do this all with Solana. So they are launching their own token. However, they are going to keep working with Solana. So it does look like there is a little bit of there is a light at the end of the tunnel for Solana. It looks like Pump.Fun is sticking with it. However, they are doing an ICO of their own token.
Yeah, it's kind of crazy how we saw the shift from Solana to ETH. And it was like something that I was mentioning a while back that I saw coming. We're going to see that shift of momentum. I didn't expect it to be so aggressive with Solana, but I did say I think there's going to get a point where we're going to see Solana being just overly saturated with meme coins, and people are going to start to make that pivot into other blockchains such as Base. And that's actually what we've been seeing. We have been seeing a lot of momentum back into the Ethereum meme coins, the Base meme coins. And that's where a lot of the meme coin strength has started to come back to. But overall, the meme coin sector has taken a big hit and it hasn't really done much. It hasn't really recovered much. It has taken a dip on overall. Like if we were to quickly just take a look at how the meme coin market is doing today, of course, not the freshly minted pairs. But we're going to see slightly a little bit of green, nothing too crazy. I mean, look at this list that I have right here of Solana. We see most meme coins up right now about a 12% move. None of them really standing out aggressively besides GigaChat at 19%. And then when we go over to Base, Brett is pumping today 15%, Ski Mask Dog 23%. Dog and Me 12%, but the rest of the tokens are not really doing much. There's not much activity going on right now with the meme coins, but I do think that we're also going to start to see that sector slightly start to pick up once again. But right now, I don't think we are in that meme coin season just yet. I think there's still a little bit more time for us to see this. I mean, this is just a prime example of what we're seeing right here with Andy, a token that I am still holding on to and I have been buying the dip on. But as you see, it has already taken a pretty big hit. But the thing is with meme coins, guys, especially when you're choosing pretty riskier ones with conviction plays, the meme coins, you can't really go ahead and make your analysis on a chart really too much on the short term. The reason being is because with meme coins, they might be down 80, 90%, and then out of nowhere, they'll pump 20x. And that's really how you hear these stories of like, oh, this person made millions off of meme coins off, $10,000 or things like that. Like I was talking to a member today that joined our community, and he was telling me that he went ahead and invested in Dogecoin early on. He said that one of his friends was mining Dogecoin, and he put in like $100 and early on, and during the bull run last cycle, it like peaked to almost $1 million off of $100 investment. Kind of wild. That's like the craziest that I've heard before, like an early Dogecoin adopter, right? But that's how it is with a lot of these tokens. Like a lot of these meme coins, realistically, when it comes to meme coins, it's one of those set it and forget it mentalities. You kind of almost go in that you already lost money in these positions. Like with these positions that I'm in, like I'm down. I've been dollar cost averaging on quite a few positions, but my mentality between these, it's like I'll let it do its thing. It is what it is. And that's the kind of mentality you want to have with your higher risk assets. And that's why I would recommend at least choosing one meme coin. I would recommend just sticking to your blue chips. Don't do anything too risky unless you're feeling a little bit more on the riskier end where you want to throw in your money into lower cap tokens. And $1,000 can make a huge difference, believe it or not. But if you are looking for meme coins that are blue chip and still want to have exposure, but not too much exposure to the downside, Shiba Inu would be a good one. Pepe. We also do have the Trump token. Once Solana starts to pick up, you should be seeing this trading higher than $20. And then a Bonk. You can't go wrong with Bonk. It's somewhere in here. And then SPX 6900. This one's a pretty good one too to consider. But I would say, and Dog with Hat. Dog with Hat's a good one too. But those are like the blue chip meme coins, like the ones that you see that are trading on Coinbase. That you're not going to go ahead and see possibly a 20 or 30x, but you will see a nice little, possibly a little bit over a 3x return on some of these meme coins. So that is just my recommendation. At least have one blue chip meme coin. Don't go too aggressive. It should be no more than like the maximum you should have, in my opinion, with risk on assets should be no more than 20% of your portfolio. So you want to have less than that usually. Under 20% is usually the best. Maximum, I would say 20% is where you want to have some money into some riskier assets. Now, that is all dependent on your investing level of where you're at. If you're a little bit more moderate to, taking a little bit more of an aggressive side, I think 20% should do it. If you want to be a little bit more on the safer side, maybe you should bring it down to like 10% and then 5% if you want to take on very low risk. But I think during this cycle, you should at least be holding on to one blue chip meme coin, because I do believe that the narrative will come back again, but right now is not the time. What are your thoughts on that, Tristan? And then you can take the lead over after this.
Yeah, I kind of my pick is Pepe. It doesn't have a significant portion in my portfolio. It's there so I can laugh at it and go, "Wow, Pepe's up 20%." My Green Frog is outperforming Bitcoin today.
Yeah,
it's there for the joke. But if you want a little bit of meme coin in your portfolio, can't go wrong with a little bit of Doge. Shiba Inu's okay, and of course, good old Pepe. Besides that, I'm not a meme coin fan. Besides that, but we will talk about some news that is in the market today, and you will see that I once again am definitely more into the things such as Bitcoin. So, without further ado, here we go. So we were. I made this yesterday. We are in a little bit of a summer doldrum, meaning the market's pretty slow. Like stock markets are at all-time highs, but last 2 weeks have been very quiet. Not a whole lot of action. So we have been a bit of a quieter summer, but that's typical of summers. Lots of people go on vacation. They're out on holidays. They're not focusing on stock markets or cryptos. The volatility will probably come back come September. We also have some news from North Korea and some ATM news as well. So very diverse docket today. First, we go to South Korea. South Korea has lifted a lot of restrictions on crypto companies. Now all crypto firms will be classified as startups. So basically, just small companies. This will give access to venture capital funding, tax breaks to these small businesses. South Korea continually makes itself into these podcasts almost every week because they're always doing something positive for crypto. For example, if it wasn't last week, it was the week before, where they were, well, the largest banks in the country were working together on making a digital yuan. So they're making a stable coin to compete with the US dollar stable coins. So South Korea continuingly to be very friendly towards crypto. I think the taxes are pretty high in South Korea, but besides that, becoming a very crypto friendly nation to do business. We go to the other Korea now, so the one that's across the line. We go to North Korea, where it has been the victim of more sanctions from the United States. This time, it's because North Korean hackers are getting into crypto companies as well as other IT companies. So it's not just unique to crypto; it's all tech companies. And they get in with the motive to do hacks and steal funds. So, in the case of a lot of crypto companies, a North Korean will pretend to be an individual from maybe China, South Korea, Vietnam, and they will go under these disguises. And since you're hiring remote workers, you're not able to see them face to face because they are probably and even if you wanted to see them face to face, the answer would probably be no, because they are in Pyongyang, capital of North Korea. So I used to actually work in the recruitment sector of crypto. So I worked with a lot of crypto startups, and I myself I definitely think I've had interviews with individuals from North Korea. Usually they pretend that they're an individual from China or an individual from South Korea or Japan, and they're living in some other foreign country or other popular big name city. I had one individual say he was in Montreal, Canada. And for those who don't know, Montreal is in Quebec, which is the French speaking part of Canada. So, me already being suspicious of his blank page of LinkedIn, he had a phenomenal LinkedIn experience. It was like Uniswap, Binance. He had all the big names in his LinkedIn experience, but his LinkedIn account was also brand new. So already very suspicious. I started the conversation with, "Oh, bonjour, comment ça va?" Which means "Hello, how are you?" in French, assuming that he had been in Montreal for, I think he wrote down like 3 or 4 years. You would assume that he would have at least the basics of French down, and he did not. It had no lick of French. And I asked him how Montreal has been, and he couldn't really give any specific locations. Like he had to think, "Oh, where I am." I asked him what he thought about the old town of Montreal and like the neighborhood near it. And then he didn't really know where that was. There's a brief like 10-15 second pause, and then he's like, "Oh, da 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 da." But what just happened is these guys are using things like ChatGPT, ripping down the question, typing down the question really quickly, and then reading out the answer. So, anyways, I didn't pass him on to the next round, but that is very interesting. I would be down. I'd actually be very excited for North Koreans to be getting into crypto if they weren't doing it in this nefarious way. Like if a North Korean came to me and he was trying to make money because in North Korea you're reliant 100% on the government, and they were like going against the government and they were being more cyberpunk, then I'd be like all for it. Let's do it. Let's get you some freedom. But it is government run hacking programs. So I'm less psyched about having that in crypto. But yeah, be careful who you hire for all the entrepreneurs and hiring managers who are watching this. We move to a much more friendly country. We're going to go to New Zealand now. New Zealand has actually straight up banned crypto ATMs. They are saying that ATMs were being used by criminals to convert illicit cash into digital assets, so Bitcoin, Ethereum, crypto, etc. And then they were doing money laundering. And then they've also put on caps on international transfers as well. So now you can't even move more than $5,000 at a time in New Zealand to in an international way. So these are very dystopian measures that New Zealand is putting on. For most people, we all know that criminals and illicit activity is still using cash. Most criminals don't have the savvy or the interest in even learning a little bit about crypto. So everyone just most crime is just using cash still. So I feel this is very unfair to the crypto industry. But New Zealand and Australia actually have been becoming tighter and tighter and tighter on what citizens can do with their own money. That is what Bitcoin is for. That is what crypto is for. There's only so much a country and government can do to control your finances in the crypto world. So another vote of confidence to self-custody. John, I was going to ask you, have you ever used a crypto ATM before?
Yes, I have a few times.
And do you think the average criminal would be using crypto ATMs, or is it a little bit beyond them?
No, it'd be more beyond. I mean, even when you're using Bitcoin ATMs, you still have to provide KYC. You used to not in some of them, but now they do ask for KYC, Social Security, ID, so they have to go ahead and verify. And then two, the second problem you're going to be running into is that you still need to have a wallet to even transfer the funds. So not the average criminal is going to go ahead and go above and beyond to go ahead and try to figure out how to move funds. The only kind of criminals that are really using cryptocurrencies are just cyber criminals. It's really all it is. I mean, of course, because they're in the tech world and they know how to move money that way. But even with cyber crime, money is still being moved in the US via bank transfers and things like that. So, I mean, at the end of the day, it all goes back into your average criminal that is doing average criminal or not average criminal crimes. The average criminal who doesn't really is willing to learn about tech is not going to go ahead and use crypto. The only way they'll probably start being introduced to crypto is if they have a smart guy or they hire someone. They're like, hey, let's try this crypto thing. But that's about it. Not that many criminals are really using cryptocurrency as a payment transfer. Because keep in mind, cryptocurrency you could trace. The dollars you can't. You can't trace the dollar. So like really you can't go ahead and get it, dot by dot exactly where the dollar and the money trail was left. With cryptocurrencies, you can literally track where they move funds, where they bridge them to, where they swapped them. So it's not impossible to track people in crypto if they are smart, savvy, criminals, I guess you want to call them. They might know how to launder the money a little better than most. But for the most part, even if they were to do that, if they really want to come after them, there is tools out there that law enforcement is now using to be able to trace wallets and money laundering behaviors and things like that. So this space is growing as far as that. And it's the same way that we now see fraud prevention and things like that going on in the banking industry, where they look for these kind of patterns and they pick up. So I do think over time, crime will start to crack down on crypto in a sense where they're going to be using the currency due to the fact that cryptocurrency is actually very, very traceable. Unlike the dollar, once you make that dollar transaction face to face or mail it, whatever the case is, there's not really much tracking to be made on where the money gets moved. Cryptocurrencies, on the other hand, whole different story. Very, very traceable.
There's a public
ATMs,
ledger.
Interesting. What happened?
Yeah. There's the public ledger. Every
Correct,
single crypto transaction out there has a transaction hash. All it takes is a very savvy analyst to track you down. So I find that whenever countries come after crypto like this, it's largely overblown. We go to Japan again. So we did talk about Japan briefly in the beginning here about their bonds. This was a little bit different though. This is a company called Remix Point, which is a very similar type of company to like a MicroStrategy or a MetaPlanet, where the main job of this company is to hold Bitcoin and buy more Bitcoin and then buy more Bitcoin. So what is interesting about this though is that their CEO Takashi Tashiharu will also be getting his salary in Bitcoin as well. So this is now the second largest Bitcoin treasury company based in Japan, behind Metaplanet. Metaplanet being the second largest Bitcoin treasury company in the world at the moment after MicroStrategy. So Japan becoming quite Bitcoin friendly. Lots of crypto innovation happening in Asia. You just don't hear about it as often. We also have some news from the political front in the United States. Mr. Musk and his new America Party. Someone asked if the new America Party will be embracing Bitcoin. And Elon Musk said, fiat is hopeless. So, yes. So, this new America Party would embrace Bitcoin. So, we're getting a nod from the richest man in the world. Very good news for Bitcoin. Hopefully, the America Party could get some seats in the Congress and Senate. That might be a true change in United States politics. I was going to also show you a little bit about the Fed here. So the Fed decision for July, it's basically set. We're probably not getting a rate cut in July as much as we would like it to happen. Not this month. Unless something really unexpected happens. It doesn't seem like we're getting it this month. However, September is looking good. It is looking better. So we have a 48% chance of a rate cut at the moment for September and only 46% chance for no change. So we're actually leaning towards a rate cut in December. Polymarket is actually saying it's more likely for a rate cut than a no change. So it's pretty tight for September still. It's you can flip a coin pretty much and see which way it will go. My opinion, though, is that we will get that cut, hopefully coming September. And you can also see on this page here, Trueflation, which goes out and shows you the what it thinks is the actual inflation. What is the actual inflation in the economy for United States? They got the UK, they got Europe. At the moment, 1.66% is what they think actual inflation is, which is actually pretty low. It is lower than the Fed's target rate, which is 2%. So if inflation is actually truly coming down, that gives another reason for the Fed to cut. I'm losing my voice. In corporate news, so for those who are outside of the United States watching this, OKX, one of the larger exchanges out there, has partnered with Circle to offer no-fee one-to-one conversions between USDC and US dollars. So for the users of Coinbase out there who are watching this, you may know that you can move from US dollars in your bank account into USDC in your Coinbase account for free. And then you can move your USDC outside of your Coinbase account to potentially your Ledger wallet or any other wallet for free. And then you can bring back USDC from your Ledger wallet into Coinbase for free. And then you can send that back to your bank account for free. So great system for Coinbase. Coinbase has lots of problems like holding your cash and being annoying, making you go through many confirmations. But we still recommend using Coinbase just because that seamlessness without any fees between going from your bank account into crypto is unmatched until today, where we have OKX now making a similar deal with Circle. Unfortunately, OKX not available in the United States, but yeah, hopefully at some point maybe it will be. In other news, we had a depegging scenario with Falcon or USDF. Not a major stable coin out there, but a few $1 million in liquidity. USDF dropped its peg not yesterday, day before. It fell to 97 cents. It did recover quite quickly. So if I went and looked at USDF right now on CoinMarketCap, USDF has recovered. It is now at 99 point. It is now at 99 cents and 99.89. So it is largely recovered from this depegging event. Basically, what happened was that Falcon X showed its reserves, so it was over collateralized. It had enough collateral. This whole thing was sparked by some Twitter comments. A large crypto influencer mentioned that the reserves that Falcon had were garbage. Well, he was accusing them of their reserves being garbage. They accused them of they had some meme tokens that you could use as collateral. And then they were saying that all their collateral is garbage meme tokens, where Falcon responded with proof that they're actually 89% stablecoin in Bitcoin, 11% and only 11% altcoins. So their transparency is pretty good. It's not, and their collateral is largely covered. But it just goes to show you that these events, these depegging events, they're something that we're not usually preparing for, but it is a reminder of not to have one type of stablecoin in your portfolio. It is good to diversify within your stablecoins as well. There are some decent vaults actually for USDF on Beefy, which is the platform that we like to work with our members, just because it's very easy to understand. There was actually some pretty good stablecoin yields for USDF pools, 34% on a USDF USDC stablecoin pool without a lot of volatility. Great. 21, 17, 15. So not something that I'd be jumping into at the moment, just in case this depegging event isn't actually done yet. But yeah, definitely don't keep all your eggs in one basket, even when it comes to stablecoins. And then two more things here real quick. The Coinbase executive Connor Grogan claimed that Pump.fun and Let's Bonk are largely populated with nothing but bots. So these bots would just be creating new tokens every 3 minutes. So a lot of the volume going through Pump.fun, Let's Bonk could actually just be robots instead of people. And I actually agree with that. You see a lot of tokens on there just being spun up about the most recent news article within seconds. It's almost scary. So I don't think a person like an individual would be out there spinning up these tokens so quickly. And they all have a very similar style as well. So it definitely does point to the accusation that a lot of these meme tokens going up on these platforms are just bots. Trump files, so it's Trump's Trump Media Company, so the one that he has listed on the New York Stock Exchange, they have filed to launch an ETF. This ETF would be a crypto ETF that would contain Bitcoin, Ethereum, Solana, Kronos, oddly, and XRP, oddly. Although 70% Bitcoin, 15% Ethereum, 8% Solana, 5% Kronos, and 2% XRP. So it's not like the altcoins in there will take up a massive chunk, only 30%. But this gives you an exposure to the more broad crypto market and just not straight up Bitcoin, which a lot of ETFs have been so far. But yeah, these ETFs are going to come out all over the place. They're all going to be very different. But it's kind of as time will tell how successful they are. Jack Dorsey also launched a little project called BitChat, basically a decentralized peer-to-peer messaging app that uses Bluetooth, so not Wi-Fi, not cellular, straight up Bluetooth, for phones to connect to each other and talk. This would be completely the privacy here, like you wouldn't be, and no one would be able to go in there and see the messages being sent to each other. So a really cool project Jack Dorsey is working on. Not too much in the realm of crypto. Like there isn't a specific crypto function to it yet. Maybe there will be, maybe there won't. But really cool for all the cyberpunk kind of guys out there. Yeah, that was all I was going to share today.
Got some really good stuff. I wanted to share this with you because I was looking across, I came across this article. And I'm just giving you guys just to check it out. I checked that out just stock, but I just came across this article that Donald Trump Jr. went ahead and snapped 350,000 shares in the stock called Thumbs Up Media Corp. Thumbs Up, a struggling Los Angeles-based social media startup that is stockpiling Bitcoin despite reporting just $151 in revenue last quarter. I hope that's like million or something, and not actually $151. But this is yeah. So the stock has gone up quite a bit. I bought a little bit right now. I didn't buy much. I only bought a couple bucks. I'm just gonna go ahead and watch it. I'm not sure if it's gonna continue to go up or if it's gonna fall, but just something to maybe consider. Keep your eyes on. See what kind of opportunities are out there. But the ticker symbol for this one, let me go ahead and tell you. It's pretty weird, to be honest. Let's see, what is it? TZ up. T as in Thomas, Z as in zebra, and then up. Thumbs up. It's the weirdest name ever.
That is a little bit odd.
But yeah, that's pretty much it on my end, man. There's not really much else. I shared everything I had to.
Yeah, all-time highs. Things are looking good, but also not too exciting. We had more exciting weeks a few weeks ago. But no, things are looking good for once. So we're quite happy about that. Well, all right. If there's nothing else you want to say, we can end it here.
All righty, let's go for it.
All right. Thanks for tuning in, everyone, to this week's episode. I hope you're walking away with some clear strategies and insights to push your DeFi journey forward. Remember, DeFi is evolving fast, and staying ahead means taking action with the right knowledge. If you're ready to dive even deeper and want a roadmap to build your own DeFi success, check out our DeFi Masterclass. The link will be in the description below. If it's not in the description of this one, check out one of the other YouTube videos from Decentralized Masters and will also be there. In the training, you will receive clear hands-on strategies to maximize returns, manage risk, and truly make the most of what DeFi has to offer, right from all the mentors here at Decentralized Masters, myself, John, Filippo, Rodrigo, Juan, AJ, and everyone else, as well as our CEO, Tan. So make sure to like, subscribe, hit the notification bell so you don't miss next week's live episode. Until then, keep learning, keep growing, and I'll see you right here next time on the Decentralized Masters podcast.
Later, everyone. Take care.
Take care.